Welcome back. I'm Pratap here. Today is 21 March 2024. In this video, let us generate Bank Nifty supply demand zone chain and we will analyze the Bank Nifty chart. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available in a playlist supply demand zone price action course at our NeoStock YouTube channel. Even I have provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we'll provide an update in that channel. Now let's get into the analysis of Bank Nifty with the help of supply demand zone chain. If you look into our yesterday's analysis, there were all major changes. See here, this is the range, first available range. This is the second available range. And this could be the next level. All the ranges are wiped out, just like that. Because today market is having a huge demand, not only in Bank Nifty, even Nifty also. So here in Bank Nifty, the prices opened with a gap up. The first 5 minutes high liquidity demand zone is gone, and the next 5 minutes high liquidity demand zone, which is inside 15 minutes high liquidity demand zone, is also gone. And prices are in this 5 minutes high liquidity demand zone, which already tested several times. Yesterday we raised a question. Next time when prices are entering, is it going to work or it will be violated? It is a question mark. That is what we said. And today prices launched in this zone and violated. If anybody would have taken a trade here, definitely your trade would have been stopped out today. Because prices went beyond your stop buffers. This has happened because such a huge demand institutions have created today. After that, there is a price action within this pro gap area. Why I am saying pro gap? Because here some zones might have been created at different time frames today. That's why we need to look into supply demand zone chain from 75 minutes onwards. Because even this high liquidity zone is violated, 5 minutes high liquidity zone, we have to delete this. See the ranges now. What kind of ranges? If it looks like the range is from here to here, from this 5 minutes high liquidity supply zone to this fine-tuned 5 minutes demand zone in the daily supply zone. What is this? This is again a daily supply zone. This entire area is a daily supply zone. Inside the daily supply zone, this order flow is there. And now prices are yet to enter into this daily supply zone. Why this kind of reaction happened? Because prices now entered into the daily demand zone and now they have started moving towards the daily supply zone. And bulls are activated in this demand zone. And now they want to show their power. In order to show their power, today they added a huge demand and that wiped out all the high liquidity demand zone which are near to this daily demand zone. When this supply will become very strong, once prices enter into this high liquidity supply zone, because the supply zone is a high liquidity supply zone. Already from this supply zone only prices came down. Now they entered into the daily demand zone. This demand zone is showing its power. Because previously when institutions created this new fine-tuned 5 minutes demand zone, at the time itself we understood institutions don't want this zone to be violated. Even though prices entered near to the distal line of the daily zone, they are still fighting. They created a new fine-tuned 5 minutes demand zone. The order flow is here. See, the entire move is started from here. But already institutions set up some high liquidity zones at lower time frames within this area. Again price came, and today morning institutions would have been decided. Now they want to show their power, the bull power. That's why with a gap up, they added a huge order flow. So who are the reasons behind these order flows? Who means which demand zones are the reasons? That we will discuss by analyzing from 75 minutes time frame onwards. Because earlier time frames, the activity is not there, price action activity. The price action activity is starting from 75 minute zone. So here Nifty 75 minutes supply zone, and here we have supply zones and demand zones, both supply and demand zones. Here if you look into the recent demand zone, the 8th one, the one they created today. See, leg out is today morning 9:15 candle. This is a high liquidity supply zone, 75 minute supply zone. At 23:11:45 we have a leg candle, after that 2 base candles. And today we have a leg out candle with a pro gap. That means a lot of order flows in that pro gap. So let us draw this zone. So let me go to 75 minutes time frame. In this 75 minutes time frame, when is the leg candle? At 11:45 minutes, yesterday's 11:45 minutes candle. This is the one, 11:45 minutes candle. After that, 2 base candles. This is a small size base candle. This is a medium size base candle. And this is the way institutions. See the origin for this. Origin is a daily demand zone only. That point you should not forget. And this is a 75 minutes high liquidity demand zone. So institutions are not easily allowing this demand zone to be violated. That point you have to understand. So this is a 75 minutes high liquidity demand zone. And today it took some support from this zone. Because supply is also strong, even though the gap pushed up with a gap, institutions also, they are fighting equally well here. That's why prices entered into this zone, again picked up the orders. From where it picked up the orders? From the pro gap area. This entire area is pro gap area. From the pro gap area, institutions kept a lot of orders. I always say pro gap is like a black hole. We never know what is there inside. So that is the reason why within this area, how strong order, we never know. But how we can understand? Based on these rejections, they will help us to understand how strong the order flow. See here, the moment prices came here, the demand might have been completely, the supply is completely would have been consumed, and now demand, the strong order flow here. See the pushed, how it pushed. This is the rejection indicates. So definitely below this rejection, there could be more strong order flow will be there until this 75 minutes zone area where this candle is there. Because up to this candle close, we have pro gap area. Exactly in that area, fine tuning is not possible. Fine tuning the zone is not possible. You cannot fine tune within the pro gap area. So this is at 75 minutes zone, high liquidity demand zone. This 75 minutes high liquidity demand zone is having confluence with this daily demand zone. You should not forget this point. That means this daily demand zone is still become very active. Who knows, in the coming days this could be, lot of price action is taking place. This could be a high liquidity zone, because software algorithm performs several checks. At present, this data is not good enough for algorithm to confirm it is a high liquidity zone. But still, how we are assuming, because institutions again and again within the same area, they are trying to do a lot of actions. They are trying to increase the liquidity. So all these things are making us get some doubts in our mind, that's it. But please remember, don't confirm unless the software tell you. Ours could be only the assumptions or guess, some kind of guess, that's it. Otherwise the equations will change. Okay, this is 75 minutes time frame. Now let's go to next time frame, 25 minutes time frame. Let me generate the chain. In the 25 minutes, ninth one is the recent demand zone, and this is created today only. Any others below this today confirmed? No. Above also, above is one confirmed. Here you see the seventh one is a supply zone, normal supply zone created today. And demand zone, this is the high liquidity. That's why we focus more. Most probably this is a fine-tuned demand zone inside 75. Let us check. So this is yesterday 1440 candle, after that one base candle. So changing the time frame to 25 minutes. So this is the one. We have a rally. This is yesterday 1440, one base candle, and today with gap up, pro gap. So I am drawing a zone, 25 minutes demand zone. So let me mark it as a 25 min high liquidity demand zone. So probably this will be providing trading opportunities in the coming days. But still we need to fine tune at 15 minutes or 5 minutes level. Okay. Next, what else we have? It created a supply zone today. Normal supply zone only. Already tested once, 2 rejections. Let us draw this for reference purpose. Inside there is any high liquidity zones at 15 minutes or 5 minutes are created, we will verify. For that reference, let me draw this 21.3 915 candle, after that 5 base candles. So this entire thing is a rally candle. This candle is rally. After that 1, 2, 3, 4, 5 these base candles and drop. That means here bears also they are creating zones. See, now both are very near. If these bulls wants to dominate tomorrow, they have to violate this supply. But today it holded the prices. See, the prices moved in a narrow range. That's it. The range has been reduced today after the supply zone creation. That means bears also saying, I also don't want to let you go easily. Earlier what bears did, I am going to completely wipe you up. That is what they said. That's why they moved the prices till the close to the digital line. Now all of a sudden bulls started dominating. They are telling what they did, they let the supply came down up to this close to the digital line, not very close, but more than half of the zone has been consumed. Bulls allowed it. Probably by this time some of the supply would have been consumed. Now bulls are deciding, okay, now I already consumed a lot of your supply. Now let me show my power. Let me show how I can dominate. That's why they created a fine-tuned 5 minutes demand zone, created order flow and pushed the price. And today morning what they did, with a pro gap is a black color area. It's a gray area. We never know what is there inside. Lot of orders they kept. Pro gap area. And they are saying, see my domination, how I am going to push the market. That is what they are saying. Now bears reacted, they responded. What they responded? Okay, let you dominate, but I don't let you go up easily. That is what they said. And they created a zone, and this zone holded the prices today, the rest of the day. From morning 12:50, morning 12 o'clock, 10 candle to the closing hours of the market, the price moved within this. Fight between demand. Maybe institutions are adding new orders here. So again, another institutions are adding new supply orders here. Fight between institutions are taking place here. This is how you should understand this price action. Okay, anyway, now fight is going on. But who is going to win? It's all depending on how much strong order flows they are going to add in tomorrow's market. But at this point of time, the ranges will be limited to only some of these areas that we will discuss very soon. Now 25 minutes. This is a 25 minutes normal supply zone. I am drawing it for reference purpose. Remember, this is not high liquidity. I didn't add the word HLQ. Any other action today? Apart from this, nothing. No other candles today. We have only these two. One is from demand, high liquidity. Another one is a normal supply zone, 25 minutes. Now let's move on to 15 minutes to get clarity if there is any high liquidity in supply side also. So I'm changing the time frame to 15 minutes. Let me generate the chain. Okay, 15 minutes supply zone chain is generated. Now let us look into the recent candles, the 8th and the 9th. And both candles are today's candles. Below any today's candles on 21st? No. Above any 21st candles? No. That means these two are the latest zones created. Out of these two, one is high liquidity, one is a normal supply zone. Probably this high liquidity demand zone could be a fine-tuned demand zone within that 75 minutes. Let us check. Yesterday 14-15 candle, after that 4 base candles. Changing the time frame to 15 minutes. This is the one. Yesterday 14-15, after that 4 base candles. That means 25 high liquidity demand zone and 15 are same. Only thing we need to extend the stop loss, distal line, because this entire zone is considered. So that's why, because the lowest priority you have to give more important. So this is 25 minutes, 15 minutes high liquidity zone. Now we need to see any order flow inside at 5 minutes level, that we will see later. So inside 75 minutes, we fine tune to 15 minutes. 25 and 15 are same here. Moreover, 15 is extended compared to 25 till the proximal line. So that means the proximal, distal line, not proximal, sorry for my mistake, till the distal line. Now the distal line of the 75 minute zone, the distal line of the 15 minute zone are exactly same. Why 25 minutes distal line is not? Actually 25 minutes I made a mistake, because this is a drop candle. Till the drop candle I have to draw. Now it is perfect. 25 minutes. I think I have drawn up to these 2 base candles. Sorry for my mistake. In drop candle, till the lowest of the leg-in also you need to consider. If it is rally, you will ignore the leg candle. Okay, now 25 and 15 are exactly same. Okay, now what about 15 minutes supply zone? Probably the one that is created. This is a 10:15 today, 10:15 candle to 12 o'clock candle, 6 base candle. When is the leg-in started? At 10:15. So this is the leg-in candle. You have 1, 2, 3, 4, 5, 6 base candles. So this is the supply. This is 15-minute supply. The immediately available. This is a normal supply. That is the point. But the normal supply zone is holding the prices. That means institutions would have added so much strong order flow here. Once we go to this daily time frame, we will get better clarity. I mean 5 minutes time frame. Once we go to 5 minutes time frame, we get better clarity. Now I am changing the time frame to 5 minutes, generating the chain. Let us look into the most recent candles. All these are all supply. Yeah, 15th and 16th. Recent candles. Already 16th is pierced, but below that there is one more. See today total how many created? 1, 2, 3, 4, 5 zones are created today at 5 minutes time frame. That is a 14 to 18. Serial number 14 to serial number 18 you need to focus. And in serial number 14 we have a high liquidity supply zone 5 minutes. And serial number 17 and 18 we have 2 high liquidity demand zones. So let's focus on them. First let me draw supply zone, high liquidity supply zone, that is serial number 14. Already tested 4 times. 9 rejections from this zone. So when it is created today at 11:50 candle and 2 base candles are there. Today 11:50. Let me change to 5 minutes time frame. This is the one 11:50 and we have 2 base candles and a drop candle. Let me draw type 2 proximal. What I do, let me reduce the color darkness for 15-minute zone. So that we know 15-minute zone. So this is the 15-minute zone. This is a high liquidity zone. That is the reason why it is holding the prices. This is the 5 minutes high liquidity supply zone. Prices went a little deep today. After that again from this type 1 proximal again, type 2 proximal again it came. That means institutions might have added new orders here. They are adding. The biggest problem is when they add new orders, we may not be knowing until some price action took place. So this is the area, what exactly the meaning? Institutions don't want to let the prices go beyond this area. What kind of institutions? Bear institutions. That means sellers. They don't want price go beyond that. If price goes beyond, probably they may get losses. That's why they don't want to get losses. They keep on adding new order flows here. That could be the reason why these high liquidities will be created. What is high liquidity? More order flow compared to the normal zones. Okay, finally, this is where we have drawn 5 minutes high liquidity supply zone. Where it happened? Inside this 25. This is the reason why we have drawn. As a reference we took, finally we ended up there is a lower time frame high liquidity zone inside this area. And here the exact order flow is there. Now what about demand? We have 2 high liquidity demand zones here created today. The first one is 18th and 17th serial numbers. The first one is 18th serial number, the lowest one. So when it is created, yesterday 15 candle, 2 base candles and a rally. Probably this is inside zone confluence, inside the zone 75-minute zone. This is the one. We have a rally, 2 base candles and a rally. And this is the exact order flow. So this is the real order flow inside this zone. Let us draw. Demand zone. Let me change that 15-minute zone, reduce the color thickness. So that we exactly see the 15 minutes order flow. So this is the 15 minutes order flow. We have a rally, 2 base candles and a leg out with gap. This is the 5 minutes high liquidity zone. This is the first 5 minutes high liquidity demand zone they created today. There is one more. After this, there is one more high liquidity they created. Where exactly they created? This is the one, 17th one. See how it holded the prices. 5 times, 13 rejections came from this zone. Simply one base candle they created the zone. At 12 o'clock 5 minutes, today 12 o'clock 5 minutes candle is the leg in. Is this the one? Yes. 12 o'clock 5 minutes, one base candle and leg out. And which holded the prices today, entire day. It didn't let the prices go even deep inside also. And this zone is exactly at the proximal line of the 75-minute zone. This is 5 minutes. See today, the rest of the day, after 12 o'clock, the rest of the day, prices were moving here only. They're moving in a narrow range. That means equal demand and equal supply. When it happens, institutions keep on adding new orders into this 5 minutes demand zone. And in this 5 minute supply zone, institutions keep on adding new sell orders. That's why there is a fight between demand and supply zone. When the prices move in a narrow range, when there is a equal demand and equal supply. Why equal demand and supply? Institutions keep on adding new orders. Exactly the same way, the other set of institutions, they keep on adding the sell orders. One institution is a bull and another institution is a bear. So fight is happening between bulls and bears. What kind of fight? Equal fight. Because there is an equal fight, prices are moving here. But at some point of time, one has to be dominated. One should become weak. The two possibilities, prices will go down. Let us assume this bear become weak. All his orders consumed and he is not able to add new orders. Then what happens? Immediately the zone will be violated. Not much stress is required. This is possibility. Second possibility. The sellers are aggressive, buyers also aggressive, both are adding orders. Now this institution, buyers, the bulls decided, let me introduce a heavy order flow. Already supply is not weak. There are good number of sell orders. But institutions, they decided add a heavy order flow. Whatever the money they have, entire money they decided to invest here. Probably that could be beyond what this seller is having. Now what happened? Because of heavy order flow, even though supply is strong, it will consume all the supply and then prices will move up. That is what imbalance means. You have learned in lesson 2 in our training program. Now currently prices are moving in a balanced way. Imbalance has to be took place in one of these zones. If the imbalance is from demand, we get a demand zone will be created. If imbalance is from the supply area, then a new supply zone will be created. That means equal has become, imbalance means unequal. Earlier the orders are equal. Now unequal means either demand exceeds or supply exceeds. Always remember, imbalance means it exceeds. Balance means within, equal between buyers and sellers. That is bulls and bears. This is only the concept behind our entire supply demand zone price action. But we are trying to understand these balances and imbalances with the help of this high liquidity zones. Because high liquidity zones only capability, such kind of capability. But anyway, these are all 5 minutes level. And now you may ask a question, what will happen tomorrow? Is the range is going to be this between these two? We never know. If institutions continue, who knows, maybe within small range, the entire Nifty will be moving within this. Possibility is there. I am not saying it will move in between. If there is a equal demand, the same fight will continue. Suppose one exceeds. Who exceeds? It can be demand or it can be supply. If demand exceeds, the prices will be moving down. If supply exceeds, if demand exceeds, prices will be moving up. If supply exceeds, prices will be moving down. Based on that, we need to decide our ranges. The first range is info line. This could be your first range. How many points range? Maximum. This is remember, this is a distal line to distal line range. 222 points range possibility is there tomorrow. When is it a best case? No. Worst case scenario. Worst case scenario means narrow range only. Because narrow range we won't get a huge trade opportunities, right? That's why I'm saying worst case scenario. Best case scenario, one of these levels has to be violated. Suppose this demand is violated. This 5 minutes high liquidity demand is violated because let us assume tomorrow bears are aggressive. This is violated. Then you will get a new range like this. This is the new range you will get. Of course, this 5 minutes demand zone will hold, but I have drawn up to this 75 minute zone newly created today. Probably you will get around 595. That means close to 600 points range will be enabled. Let us assume tomorrow bulls are aggressive. If bulls are aggressive, probably you will get a new range like this. Because this entire 25 minute zone will be violated. Only 5 minutes only high liquidity. Remaining all normal zones. So easily this zone will be violated. We never know. Sometimes institutions again at a little higher they may create new order flow. That possibility is also there. We cannot rule out any possibility. But the best trading possibilities I am telling in case. If institutions are holding this 5 minutes high liquidity zone, let us assume you may get this opportunity, trading range tomorrow. This is the maximum. Whatever I am showing is maximum. A maximum of 770 points opportunity you get here. 770 points opportunity. And within this area you get 595 points opportunity, close to 600. If the same range continues, narrow range, only 220 points only. That to distal line, not proximal to proximal. Proximal to proximal, even very small. within 100 points or maybe within less than 100 points will be there. Mostly that may not happen. One will be dominated at some point of time, but which side it is going to violate, we need to understand. But the one point you should not forget, now price direction also see. Now prices are moving from demand zone to the supply zone. They haven't reached the supply zone. But anyway, the overall demand and supply zones are very close to each other, this demand and supply. So we need to verify what is going to happen tomorrow. But anyway, these possibilities are there, immediate possibilities. So remember these three possibilities. So this is the possibility for us. So this is about Bank Nifty analysis. Hope this information will be helpful to you for your tomorrow's Bank Nifty point of view. So let's all take a break here and again meet in our next video. Thank you.